All right. Cycles of the markets. I like this one. This one's good because it helps you understand that fear and greed and people's FOMO, all of the emotions of the markets is described in this video. So pay attention and let's waste no time. The wrong one. All right, cool. Financial markets go through these cycles of ups and downs. These cycles are driven by various economic, psychological, and systematic factors. And it follows a pattern. You have expansion, contraction, consolidation, or what I call the trough slash like prior to expansion. And then it happens all over again. And then you have your peak, and then you have your recession again. So it's a business cycle. It is how our world cycles on called the business cycle. It really varies. You could have a large expansion phase of like 10 years of expansion, and then you could have like a 2-year recession, and then you could enter another 5-year expansion followed by a 5-month recession. So the expansions are usually a lot longer than the recessions, longer lived, and the recessions and the contractions are very short lived, but they still occur. So expansion phase is where economic indicators such as gross domestic product growth, corporate profits, and consumer spending are on the rise. You're making a lot of money, you're spending money in the economy, you're boosting the sales of companies and corporate profits, which then boosts what? The stocks and the earnings and the evaluation of investors, and everything's good. The economy's great, right? Optimism is high and investors are genuinely confident in the market's future prospects. This phase often sees rising stock prices and increased investment activity. So boom, expansion, baby. Everything's awesome. You hit a peak. You always hit a peak, no matter where it is. It continues to grow, reaches a peak where economic indicators start showing signs of slowing down. You're spending less money, you're making less money, corporate earnings are going down, businesses aren't making enough money. So this creates a rising of interest rates to slow down the growth of consumer spending, which is where we are right now, where we see that rising interest rates becomes a concern. The stock market was coming down for a little while, and our inflation was super high. And so geopolitical tensions are also rising as well with the war and all that. So investors become more cautious as they anticipate a potential turn down. Once it hits the peak and interest rates rise and people stop spending money, then we have a recession, which is technically what we just avoided. I highly doubt it. It's a very touchy subject with people because it's like, oh, we're in a recession when we still have pretty strong economic activity and inflation is still coming down. It's a very touchy concept. It's very micro and macroeconomics. It is so broad and in depth. There's so many factors that people have to consider before taking actions. And so this is why I love this lesson on the business cycle, because it narrows it down into a topic that you can really understand why we are where we are in the market. So the contraction in the recession phase is the downturn phase of the cycle where economic indicators decline. So GDP growth goes down, corporate profits go down, rising unemployment, people lose their jobs, stock prices drop, investors sell their assets in anticipation of further declines. And this phase is often characterized by fear and uncertainty because we're human. Our emotions overwhelm us and our actions, replicate what we're feeling inside because our emotions are so, I don't even know what to say. we're very emotional creatures, human beings. We need reassurance. We need to be able to stay calm during the storm. And a majority of us are just not good at doing that. And that's the honest truth. So expansion, peak, contraction, trough. After we go through recession and contraction, we have a bottom that gets reached where economic indicators start to stabilize. There's signs of improvement starting to appear. Investors start looking for opportunities and undervalued assets during this time period. So, this is after everyone loses money and we're starting to slowly get jobs again and get some growth and make money. And after the trough, the cycle repeats itself. So after the trough, the expansion starts again. And as it gradually enters an expansion phase, the severity and the length of each phase can vary on a range of factors: government policies, economic conditions, technological advancements. I mean, think about it, right? What have we been through? COVID, war, you get the point. So the business cycle is really important to understand. This is called the Wall Street cheat sheet. It is the cycle. It's the psychology of a market cycle. So the feelings appearing as the market fluctuates. And we're going to pull up Bitcoin because Bitcoin exemplifies this perfectly. We have a disbelief. This rally will fail like all the others. It starts to shoot up, right? The price starts to shoot up over this. This is time. This is price, right? So the market starts to move higher. We have a hope that it's possible that it'll go up. The market starts going. This rally is real. Time to get fully invested. I will buy more on margin. Got to tell everyone to buy. Euphoria is the peak, right? We have expansion and then we have the peak. Everybody's like, I'm a genius. We're all going to be rich. That's the peak. And then what happens? It drops off, consolidates. Oh, we're good. We're all good. Complacency. It just needs to cool off before the next rally. Market starts to tumble. You see your profits slowly decline and your emotions get in your head. You let it get to you. Why am I getting margin called? Why am I losing money? This dip's taking longer than expected. This is not a 618 retracement. My investments are with great companies. They will come back. Shit, everyone is selling. I need to get out, right? Capitulation. I'm getting 100% out of the markets. I can't afford to lose more. Shit, everyone is selling. And then boom, for a while, look at this. It just sits there at the bottom and everyone's depressed. My retirement money is lost. How can I pay for all this new stuff? I'm an idiot. That's literally the emotions of every trader every single day over the course of years. That is the market cycle. And then it restarts. It restarts. So where we want to get in is where? At the depression phase, the disbelief phase, the hope phase, the optimism phase. We want to be in those phases. We want to be in those phases, guys. So let's go over Bitcoin. Love it. Love it. Check this out. This is a prime example of the cycle of the markets. Look at where Bitcoin is right now, guys. Bitcoin is at $41,724. I first started day trading in May, June of 2020. Bitcoin was trading at $8,000 when I first started trading. I missed the entire move because I was in disbelief. I was in disbelief and I was literally day trading in 2020. And I'm like looking at the market right now and I'm going, holy crap, it's about to happen again. Like this rally is literally about to happen again. And people are going to miss out. And then what's going to happen is people are going to start hopping in up here. At 53,000 is when people start hopping back in. And then Bitcoin goes to 84,000, hits a peak, and drops all the way back down to 53,000. I mean, that is literally to the T what that shit is going to do. Notice the entire cycle: disbelief, optimism, hope, thrill, excitement, euphoria. Euphoria is here, drops all the way back down to 31. People get out, buys all the way back up, hits a really high of 69,000, 68,000. Everybody's literally, dude, I remember the Instagram posts. The Instagram posts, people were going nuts. They were so excited. I told you. And then the market absolutely capitulated and went all the way to $16,000 per Bitcoin in 2022. 2023, the market starts to regain some of its losses. And here we are towards the end of the year where the market is absolutely starting to take off. Same thing happened in 2023. Look at this, guys. Look at this. Oh my God, it's so beautiful. Check this out. What date is that? December 20th. December 18th, 2020. It was at $20,000. It went all the way to 41,000 by January. And then after January, by April, it hit $64,000. So what do you think's likely to happen here, guys? Check this out. Check me out. The market, where it is right now, is almost guaranteed to retrace. To where? To here. To 33,000. It's going to retrace to 33,000, and then it's going to absolutely explode. So, me personally, I'm going to be dollar cost averaging. That's my game plan. That's my game plan. I'm going to be buying here, 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 all the way up to where it hits. Bitcoin's going to 70K because this cycle happens over and over and over and over again. Check this out. This was in 2017. Disbelief, optimism, hope, thrill, euphoria, capitulation, denial, panic, depression right here, depression. People get out, don't even touch it ever again. Look, like the timing on this shit is so insane to me. Like every time in January and December, the market starts to take off again. And then like literally just takes off right at the end of every December. And then we have some sort of pullback in the early beginning of next year. And then it just takes off after that. So this right here was a smaller cycle of what? This. And then we zoom in over here as well. Same exact thing happened over here. The depression was longer. In 2013, when Bitcoin became a thing, it was the same idea, right? You have a concept that goes from $100 to $1,000. That is a huge gain. That is a 1,439% move. That's crazy. Same exact concept. Depression and then expansion. That is the business cycle. That is the business cycle at its finest. S&P 500, same thing. Over and over and over again. Expansion, contraction, expansion, contraction, expansion, contraction, expansion, contraction, expansion. And we'll see how long this one goes for. I'm not too sure yet. It looks like it wants to continue higher, in my opinion. It looks like it wants to go for a ride. That ideally this would be the play, right? And even on a large scale, I mean, 50% retracement, that's pretty fucking solid. Excuse my language. So that's going to go ahead and wrap up the business cycle. I hope you enjoyed this video, and I will see all of you on the next one. Philosophies of trading. Let's see here. What is it? Yep. Philosophies of trading and trading like a professional are the last two videos in the intermediate series. I'm so happy and grateful to be here with all of you, whether it's presently in the moment or in a recording. And I'm so happy and grateful to see you all in person one day in the beaches of Mexico, sipping on our margaritas, enjoying life as it should be enjoyed with our time in our hands. We don't have any bosses, we don't have anyone in charge of us, and we just do whatever we want. And that is exactly why I started this. I will see all of you in the next one. Take care.